So, hey guys, I'm Conrad Van, the mortgage man. My mortgage license 1951251, a loan officer with Nexa. The master class is called Refi Ready, right? So, we're going to be talking about rate and term, cash out, FHA streamline, and then VA IRRRLs, which is interest rate reduction refinance, is still a streamline, right? So, we're going to get started. First, in the chat, tell me where you guys are tapping in from. Give me a city, give me a state where y'all tapping in from. And I'm gonna put in the chat too. Cali. Well, I'm at work listening along. Okay. All right, Chloe, I hear you. Let me know where you guys are tapping in from. Georgia, okay. Georgia in the house. Washington, all right. Tennessee. Okay, so we kind of like all over, all right. Waiting, so someone else should have just came in. All right, so let's get into it. All right, so what we're going to be covering. So we're going to be talking about what a refinance is, the benefits of refinancing, what determines the rate, where to go for refinance, the type of refinancing, qualifying for a refinance. We're going to review a loan estimate real quick, and then the documents needed for refinance. So that's on the agenda for today. All right, so statistics question for you guys. How long does the average homeowner stay in their initial 30-year fixed loan? How long does the average homeowner stay in their initial 30-year fixed loan? How long? Let me know in the chat what you think. 5 years, 10 years. Tell me what you think in the chat. How long does the initial homeowner stay? See, 5 years. Kim said 5. What do you guys think? 2, 3, 8, 7, 3. Okay. 3, 5, 7. All right. 3. All right. Let's see. So this is according to at the bottom, you'll see Redfin, right? So they're saying millennials, about 5 years or less, about half of them. But when we go here to the elderly population, about 24%. So that's about 24, 30, 50. So 5 years or less for about 50% of the population of those getting homes are staying in. So what is refinancing? Refinancing is paying off your current loan and replacing it with a new loan. When you pay off the remaining principal, you're no longer borrowing money, so you don't have to pay any more interest. So refinancing simply is replacing your loan. So somebody in the chat, put the word replace. Put the word replace. Refinance means replace. Refinance means replace. Put replace in the chat. Let me see it. Let's see. Replace. All right, all right. So refinance is just replacing your loan. All right, so we talked about what refinancing is. Boom, we're there. So benefits. So in the chat, tell me what are some of the benefits of refinancing? What are some of the benefits of refinancing? Just think about it. Why would you want to refinance? What are some of the benefits? Like lowering interest rate, getting cash out. What would be some of the benefits of refinancing? Better rate, yep. Better rate, lower payment, yep. Anybody else? Anybody else? Lower payment. Yep. So those are some of the benefits, right? So let's go through it. The benefits include getting cash out. This is tax-free. Now it's tax-free because it's still a loan, so you don't have to pay taxes on borrowed money, right? Lower your interest rate, you can shorten the term, you can get a lower payment, you can consolidate debt. That's where you're paying off credit card, other bills, and you're putting it all into your mortgage. And then you can go FHA to conventional to remove or to drop the PMI when you have enough equity, right? So these are all the benefits of refinancing. Now your goal should be maximize the benefit and minimize the cost. So when you're refinancing, although, yeah, you're getting cash out, you're lowering your interest rate, you don't want to pay $10,000, $12,000 for that. The goal is to maximize your benefit and it minimize the cost. Okay, so when should you refinance? So you want to refinance, my head is in the way. So you want to refinance when it makes the most sense for you, your family, and your situation, right? Your finance should hopefully grant you two benefits. So the benefits, as I mentioned, it's cash out, it's lowering your interest rate. It's Ryan's trying to join. It's lowering your interest rate, right? It's consolidating your debt, FHA to conventional to remove that mortgage insurance. So ultimately, what I tell my clients is you want to try to get at least two of these, right? So look, if you pull cash out, you should be able to pay off some of your debts. Boom, you got two benefits. If you lower your interest rate, right, you're lowering your payments. You got two benefits. If you're lowering your interest rate and shortening your term, you got some benefits. Your payment may go up, right? But look, you got two benefits. And lastly, if you're going like FHA to conventional, you're removing that mortgage insurance. What are you doing? You're probably going to be lowering your payment. So when you refinance, you want to try to maximize your benefits, minimize your costs. Here's the thing. Consider or think about your life and not just now when you're refinancing, but 3 years or 5 years down the line. For instance, do you have kids getting ready to go to college? So while you just might want to lower your interest rate, you may think, hey, my kids are going to college in 2 years, 3 years. Let me pull out 100,000, maybe spend 50,000 on bills and things like that, put another 50,000 into an account where it's collecting some interest, and then I can use that monies for my kid, right? So you want to really, with refinancing, you really want to look at your situation and what you're trying to do. Don't look at the hype and the news and stuff like that. You want to look at your situation and analyze it to see what you need from the refinance. All right, so we talked about refinancing, simply replacing your loan. We talked about the benefits, getting cash out, right? Lowering your interest rate, lowering your monthly payment. For number two, for the benefits, how many benefits did I say you should get? How many benefits? How many benefits should you get when you're refinancing? Put in the chat. I might be holding it up. I might be holding it up. That's right. Okay. Two. Yep. All right. So two benefits. So now let's go over what determines the rate. So it's multifactorial and it's complicated, but I'll try to explain. So what determines the rate is going to be the current market conditions, right? But also two, your occupancy, right? Is this your primary, secondary, or investment property? Property type, is it single family? Is it a duplex, right? Is it a condo? Is it a townhome? The loan type, is it FHA? Is it conventional? What's your credit score? What's your loan size? Now with loan size, right? If you have a loan at say 200,000 versus one that's like six, there's more meat on the bones for the six. So lenders might give slightly better pricing for those higher loan amounts, right? Debt to income, the higher your debt to income, the higher your risk. So you might have slightly worse terms with higher debt to income. Are you doing a cash out? And then what's your equity? So there's multiple factors that determine your interest rate. These are the ones that you can control. Now, the ones that you can't will be what's called the market factors, right? So that's going to be like one, I won't go through all of them, but one will be like employment. So it works like this. When more people are working, more people are making money. So there's more free cash in the economy, in the economy, right? Now, when less people are working, they have less money in circulation, right? So when there's less money, they have to incentivize people to get mortgages by actually lowering rates. So that's one. But you have the 10-year treasury, you have the Fed. So the Fed. So let me actually kind of go out of this and show you guys something a little bit more. So when you're looking at interest rates, you want to use Mortgage News Daily. So somebody in the chat put Mortgage News Daily. Put Mortgage News Daily. And I'm going to show you guys exactly. This is how you can get a ballpark or an estimation of where rates are. So we'll just look at like today's rates. So this will kind of show you the 30-year fixed, 15-year jumbo VA. So this gives you a quick ballpark of where the market is, right? And you can kind of see, they also have a ton of different articles and other things like that on the site too that you can reference and look at. Oh, here we go. This is what I was looking for. So with mortgages, we know where mortgage rates were, right? We can track this. We know where mortgage rates are, and we have indicators of where they're going or where they may be. Now, the indicators are basically saying we should be tapering off around this point, but look, they kind of move in waves. So I would expect probably pretty soon there may be a pullback where the rates would dip up. Even if they're still going down, even though they're trending down, they may still creep up a bit. But that's just how the market moves. So it's very important that you guys know, hey, they move in waves, they go up and they go down. But we know where rates were, we know where rates are, and we have indicators of where they should be going. And the indicators are saying we should be seeing them around this 5 range, right? Yeah. So let's go back to the presentation. All right. If you guys are like, if this is some good information, drop some fire emojis in the chat or something. Drop some fire emojis. I mean, say something to me. Drop some fire emojis. Say something. Drop some fire emojis. Somebody drop a fire emoji in the chat if I'm giving y'all some fire. All right. Okay, so oh, there we go. There we go. Thumbs up. I'll take the thumbs up. I'll take it. All right, so again, Mortgage News Daily. I went to the site. I showed you guys. So again, with pricing, again, how it works is a lot of people say, "What's the rate?" What I do is this is one of my lenders. I got over 200. I would put in your scenario, right? Like what I said, the loan amount. What's your loan amount? What's your name, right? What's the state? What's the zip code? What's the income? What's the debts? What's the taxes? Insurance? Are you a first-time home buyer? All these other pieces. And then at the bottom, I can go ahead and click get a quote, and then I'm able to get a quote and kind of see where you stand or where we price you out for your situation. Okay, next question. Where you go to refinance. So in real estate, there are 3 big transactions. You have purchasing, refinancing, and selling. So when you are purchasing, you're going to use a buyer's agent and a loan officer if you're financing. If you're paying on cash, you'll just use a buyer's agent. When you're refinancing, you just use a loan officer. So somebody in the chat, put the word loan officer, put loan officer, put loan officer. So when you're refinancing, you'll just use a loan officer. Now, when you're selling, right, you're going to use a seller's agent. You don't need a loan officer because you're selling the property, right? So when you're purchasing, you'll use a buyer's agent and you'll use a loan officer to get pre-approved. When you're refinancing, you're just going to use a loan officer. And then when you're selling, you'll just use a seller's agent. But when you're refining, loan officer, that's what you need. Let me see. Loan officer, loan officer. All right, all right. Y'all see, y'all got it. Y'all got it. Y'all know what's up. All right, so we talked about what a refinance is. It's replacing your loan. We talked about the benefits, getting cash out, getting a lower interest rate, lowering your payment, things like that, right? We talked about where you go for a refinance, a loan officer. Now we're going to talk about the types of refinances. All right, so the types of refinances. We have rate and term, cash out, FHA streamline, and VA streamline. So these are the types of refinances. Let's kind of dig into them. So a rate and term refinance is a refinance that does not pull cash out. It's your current loan amount stays the same. You are only changing your interest rate and or the term. So maybe you're 30-year, 20-year, 15-year. So a rate and term, you are only changing the interest rate and the term. You're not pulling cash out. That's it. Rate and term, you're changing the rate and the term. Somebody in the chat, put rate and put term. Rate and term. Put rate and term. So rate and term refinance, we're just changing the rate and the term. We're changing the rate and the term. All right. So for conventional, here's a matrix, right? When we're purchasing and when we're refinancing, rate and term. So for your primary residence, you go up the 97%. So you need 3% equity when you're doing a purchase or a rate and term refinance, right? And it'll change here for second homes and investment properties. But that's another masterclass. I don't want y'all looking over there. We just look at right here. So for your primary residence, 1 unit, you need at least 3% equity when we're looking at purchasing or rate and term refinancing. So you need some equity. You need about 5% if it's a multifamily. This is for conventional. All right, now FHA, again, when we're purchasing or doing a refinance, rate and term right here, 97.75%, right, is the max we can go up to. So, and this is for 1 to 4 units. So that just lets you know the max LTV. Now, I had someone they say, or in the comment section, they said, I want to lower my interest rate, but I don't want to restart my 30-year mortgage. I got you. I got you. So not only can we do like a 10, 15, 20, 25, or 30 year, but you'll see this is flex. So we can do 8-year through 30-year terms available. So we can give you a 9-year mortgage. We can give you a 15-year, or let's say if rates drop and you've been in your home for 2 years and you're like, I don't want to restart the 30 years, we can still give you a 28-year, 27-year, whatever you want or you're comfortable with. So we do have flex terms. You don't have to just do a 10, 15, 25, or 30. You can do a 26 or an 11-year mortgage if you so choose and if you qualify for it, right? All right, cash out refinance. This is everyone's favorite refinance because, like, literally, when you first purchase your home, you have to sign and you have to put all this money. When you're doing a cash out, you're literally signing and at closing, you're walking away with tens or hundreds of thousands of dollars. So everyone loves cash out refinance, especially this is another masterclass. But when you get into investment properties where you pull that cash out and your tenants are paying it back. So you're pulling out money and somebody else is paying it back for you. I got you. I got you. So a cash out refinance, this refinance involves pulling cash out of your property. So your current loan plus the cash out amount needs to be less than or equal to 80% of the current value. So there'll be a new appraisal, things like that, right? So your cash in hand is going to be your cash out amount minus closing costs. So let me repeat that. Let's say you're getting 100,000 out. Let's say the closing costs are 5,000. Your cash in hand is 95,000. Again, if you're getting 100,000 out and your closing costs are 5,000, then you'll be getting 95,000 cash in hand. Make sense? All right. If y'all got it, say got it in the chat. Say got it. Say got it. Say something. Say got it. Say I feel you. Something. Say got it. Say Roger. Say copy. All right. All right. Got it. Got it. All right. My head is like in the middle of this. I'm sorry, y'all. I got a big head. Forgive me. I got good information, but a big head. All right. So cash out refis, we're looking at conventional, right? So for conventional, your primary residence, again, remember I said the current loan plus the cash out, it needs to be 80% or less, right? Because you got to have some equity left in the home. And it's going to change and fluctuate based off of the different occupancy types, right? But for your primary residence, if you're trying to pull cash out, your cash out plus your current loan has to be 80% or less. All right, so the FHA, for FHA, let's look at cash out, right? Again, 80%, same thing. 580 FICO, 80%. So the cash out plus your current loan needs to be less than 80%. Okay, so this is a blended rate calculator. Let me kind of just move my head like right there. All right, so here's a blended rate calculator, right? So what this is, I did this, there's an infinite number of different possibilities or scenarios, but I want you to look at this. The mortgage is 320 at a 4%. Credit card at 23%, and then let's say a car loan at 7%. The blended rate when you add all these together is 5.4. So if we were able to refinance you to go from a 4% to like a 5.5 or 5.3, even though your mortgage rate goes up, this may potentially still be a good deal for you. Again, so when you're doing a refinance, it's particularly a cash out or debt consolidation, it is possible that your mortgage rate could go up, but it could still make sense. Now, there's times where it couldn't, right? Like maybe the numbers don't work. Because like I said, there's an infinite number of possibilities or way we could dice this. But if you're getting rid of some payments and then those payments are at higher interest rates and your mortgage goes up and your rate goes up, it may still make sense, right? So that's what I kind of wanted to illustrate with this blended rate calculator. This is a pretty nifty tool. All right, FHA Streamline. This is literally, yo, this is everything you need to know about FHA Streamline. It's like a one slide. I got you. I got you. So FHA Streamline, you need to currently be in an FHA loan. Your loan needs to be seasoned. I don't mean Laurie's. Sorry. Okay, never mind. Basically, you need to be in it for 210 days, 6 months, and have made at least 6 mortgage payments, right? So somebody in the chat put six in the chat. Because that's how long, that's how many payments, that's how many months you need to be in it. Really, if you wait 7-8 months, you'll hit that threshold. But put 6 in the chat. No appraisals required, and there's no debt to income calculation for an FHA Streamline. Now, for this loan to work, you need to have what's called net tangible benefit. That is lowering the interest rate by 0.5 or lower, right? So, but the thing is, remember what Conrad said. Conrad said, maximize your benefit, minimize your cost. We're not really just trying to lower your interest rate by 0.5. You know what I mean? Like we're trying to lower it by 2%, 2.5, or depending on where you bought, right? So like if your interest rate is above 7, I'm talking like 7.1, mid sevens, high sevens, and rates right now are like in that 5 range, and potentially you could get a 4 or 2. It makes sense, right? We're going from 7, 6, 5. We're dropping it about 2%, sometimes a little bit more. So the benefit is there. It's very noticeable for a Streamline right now. If you bought recently and your interest rate is higher in the 7s, documents are there, but we'll go through the documents a little bit later. Now, this is a really hot loan right now, so I do want to pause. If anyone has any questions, you can unmute. You can put them in the chat because this is a really hot loan and a really hot topic. A lot of people are getting things in the mail, right? Are their old lenders calling them saying like they can do a no-cost refi? By the way, that's a lie. Hold on. Let me tell you something. All right. So refinancing is never free, right? So when you purchase, you have down payment and closing costs. When you refinance, you just have closing costs. So there's still closing costs. A lender credit may cover it, right? But nonetheless, there are still costs associated with doing a refinance. It's never free. So yeah. But does anyone have any question? You can unmute. You should be able to unmute if you have any question or put it in the chat. I see it there. Yep. Anybody? All right. If you do, just unmute at any time. That's fine. I ain't tripping. All right. So the VA EARL, it stands for Interest Rate Reduction Refinance Loan. It kind of looks weird, like EARL, but whatever. So the IRRL, it's just like a FHA Streamline. You just currently need to be in a VA loan and still live in the property as your primary. Your loan must be seasoned, meaning you've been in it for 210 days, 6 months, and made 6 payments, right? The funding fee, 0.5 if you're disabled, there's no funding fee. And then your new loan can't be higher than your last one. No appraisals required. There's no debt to income calculation. So question for you guys. For FHA Streamlines and for VA Streamlines, do you need an appraisal? Yes or no? For FHA and for VA Streamlines, do you need an appraisal? Yes or no? For FHA and VA streamlines, do you need an appraisal? Yes or no? No. Good job. Oh, sorry, I missed a question. My bad, y'all. Y'all should tell me. Okay. Kim said, for FHA streamline, if you refinance now for a lower rate, could you refinance again after another 6 payments? And the new loan rates drop even more. Yes. So, but here's what Conrad's going to tell you. When you refinance, right, every time there's closing costs. So although like you're getting a benefit, you want to try to do it one time and maximize that benefit and be good with it. Because let me show you this. Let me show you guys this. Give me 1 second. All right. So Mortgage News Daily, my favorite site. Y'all got to go in here daily. Okay. Early payoff. So what you can do with this is you can put in your loan amount. Like, okay, for instance, let's say you refinance and your new loan is like, I don't know, 300,000. Let's say your interest rate is, I don't know, 5.25, right? 30-year, and you do it September, so you do it October. You're making an extra payment of $100, or I guess it went to 250. So I would say this: if there's enough benefit for you to refinance, refinance. And instead of refinancing over and over and over, instead just make extra payments. And you can play with this calculator, right? And you can see you'll save another 8 years and you'll save 87,000 in interest if you make an extra payment of 250 a month. So I would say if you have the benefit, if it's sizable, refinance. And because I can't like, I mean, I can try to predict the market, but I can't really. I know there's indicators. Yes, I do think rates will dip down just a little more. But remember, there can always be a pull up or a pullback, right? But if there's enough benefit for you, refinance now. And if rates keep dropping, it is what it is. I would just go ahead and make some extra payments, and that's how you can get that benefit still. Does that make sense? Let me check the chat. Make sure there was, hopefully I answered your question. Thank you. You're welcome. Look, that's what I do. That's what I do. You know what I'm saying? All right, so let's continue. But yeah, if anybody else has a question, just put it in the chat. All right, so we talked about what a refinance is. So a refinance is just replacing your loan, the benefits, getting cash out, right? Lowering your interest rate. What determines rate? It's a multitude of factors. The types of refinances. So there's different types. Somebody in the chat, tell me one of the types of refinances that we covered. Rate and term, cash out, streamline. Give me in the chat. Tell me at least one of the refinances that we covered. One of the refinances that we covered. Oh, y'all shy. And I gave y'all the answer too. Okay, here we go. Rate and term. All right, yeah. So you got rate and term, you got cash out, right? You have streamline. You got a few options. All right, so now we're going to talk about qualifying for a refinance. All right, so qualifying for a refinance. See, my head is still in the way. See, y'all probably don't have these problems because y'all head not big. All right, so qualifying for a refinance. So there's 3 things you need for a loan, whether it's purchasing or refinancing. It's a positive credit profile, durable income, and cash to close. So now, when you're refinancing, we still need that 580 for FHA and VA, right? 620 plus for conventional. If streamline, this is waived. So if you're doing a streamline, there are, and I have lenders, right? I have investors where if your credit score is lower than this, we're good as long as you've made that mortgage payment on time. We can just look at the mortgage history. So you need a positive credit profile, but if it's streamlined, as long as you made your mortgage payment on time for 6 months, 6 payments, we're good. The second thing you need for a loan, purchase or refinance, is durable income. So you need to meet debt to income requirements. If you're doing a streamline, this is waived because we're not looking at debt to income or DTI for streamlines. So in the chat, question, do you need to meet debt to income if you're doing a streamline? Do you need to meet debt to income if you're doing a streamline? Yes or no? Do you need to meet debt to income? Do you need to meet debt to income if you're doing the stream? Let's see. No, correct. So yeah, if you're doing a streamline, we don't have to worry about the credit. We just need to make 6 payments on time, and then we're not looking at the debt to income. So I'm gonna give y'all some game. Give y'all some game. So check this out. Let's say you need to get a house and you need to get a car. You can buy the house first, right? Get the car, and if and when rates were to drop, you can do a streamline because we don't look at the debt to income. See, I got y'all. I got the game for y'all. All right. So in the last piece to qualifying for a loan, purchasing or refinancing is cash to close. Now check this out. When you buy a home, you have to pay down payment, right? And then you have closing costs. So down payment plus closing costs is cash to close. But when you're refinancing, you're in the home already. You don't have a down payment. You just have to pay the closing costs. Now, with closing costs, if rates drop enough, a lender credit can cover some or all the closing costs. Depending on the type of loan, you can roll the closing costs into the loan. What that means, let's say your loan is 300,000 and the closing cost is 3,000. Your loan will be 303. So a lender credit can cover it if rates drop enough. You can roll it in, or sometimes you have to bring in some cash at closing to get that taken care of as well. So there's a few different options. It just depends on the loan type, where you bought, and where rates are now. But again, no refinance is free. So I think y'all need to put that in chat. Somebody in the chat put no refinance is free. Put no refinance is free, or no refi. No refi is free. Because again, if rates drop enough, a lender credit can cover the closing costs, yes, but that doesn't mean it's free. So a lot of times people get you to click, say, hey, no appraise, I'm gonna do a free refi for you. There's no such thing. It doesn't exist. There's no such thing as a free refinance. Now, a lender credit can cover it if rates are, drop enough, but there's no such thing as a free refinance. You see, no refi is free. Good job. All right. Let's get it. All right, so I'm sharing this to let you guys know, outside of the traditional mortgages, I have a lot of other products. So let's say you have 30-day lates. This right here, mortgage history, is saying as long as you don't have any 60-day lates, you can do a purchase or a refinance, but you need 20% equity. So you got to put 20% down if you're purchasing, or you got to have 20% equity. Cash out, we can go up to about like 70% of the value of the home, or 75, depending on your credit score, right? Same thing here, right? Also, if you have maybe 30, 60, 90-day lates, as long as you have no more than one 120-day late, you can look at purchasing or refinance. You can't do cash out, but if you have 30% equity, or you're putting 30% down. So I'm just showing y'all to show, like, I have other products that may not be the traditional streamline or rate and term, but again, it's going to be a higher down payment, or you need more equity, and then the fees and everything will be higher. But I have that. What is a refinance? A refinance is replacing your loan. Replace. Benefits, you can get cash out. You can lower your interest rate. You can lower your monthly payment. You can consolidate debt. You usually want at least 2 of those for it to make sense for you. Where do you go to refinance? Conrad, the mortgage man. Effectively, you just go to a loan officer. You don't need a real estate agent. If you're selling, then you just go to a real estate agent. Or if you're buying, use a loan officer and a real estate agent. But if you're refinancing, it's just a loan officer. All right, and we talked about qualifying. Remember, streamline, you don't have the debt to income. You don't have appraisals. That's why it's called streamline, because it's easy. All right, now we're going to review a loan estimate. So a loan estimate is a legal disclosure you get when you're purchasing or refinancing real estate. So I'm gonna just go through it like kind of briefly. I'm not really gonna hit on everything, but it'll have the date issued. It'll have your name. It'll have the property address. It'll have the sales price. The loan term is this 30-year. Remember I said we could do like a 27-year if you want. So you should see 27 years if you wanted a 27-year. Is it purchase or is it refinance? The purpose will be there. Is it fixed or is it adjustable? What's the loan type, right? Is it locked? Yes or no? That's important. to know that the lender locked the rate, so the rate won't change, or is the market still moving? The loan amount, the interest rate, can this increase after closing? No, no. Monthly payment, no. Prepayment, that is, if you pay this off early, is there a penalty? Usually it's going to be a no here. Balloon, if you're doing a standard loan, it's not going to be a balloon payment. Balloon payment is do you have a large lump sum due for the loan? And then the calculations, right? You have principal and interest. That's going to be fixed. If it's fixed, it's not going to change, right? Mortgage insurance. You'll see the mortgage insurance dropped off because this is a conventional loan. So they're anticipating the mortgage insurance to drop off. Then you have the estimated escrows. But check this out. Check this out. Look, look. You see it says this amount can change or can increase over time. Escrows are your property taxes, your homeowner's insurance, right? So if your property tax premium increase, if your or your homeowner's insurance premium increase or your property taxes increase, then this can increase over time. So some people, they say, I didn't know, I didn't know. This is on every loan estimate and every closing disclosure. Make sure you're working with a loan officer that's like explaining and breaking this down or doing like a video to like explain it to you, right? Then you have estimated closing costs. Closing costs are the fees associated with doing the loan. Cash to close is the closing cost plus the down payment. Again, closing costs are all the fees to do the loan. Cash to close is the down payment plus the closing costs. Here's the second page. So you're going to have the points, if there are any. Application, underwriting, processing fee, that'll all be here. It's very, very important if you're like shopping lenders and stuff that you're looking and seeing the points. Because sometimes consumers are just looking for a low rate, low rate, low rate. And that can kind of cost you because a lender could show you the lowest rate, but you may not see the points associated. It could be tens of thousands of points. And that doesn't make sense because it might take you 8 years to break even or see the benefit. So it's very, very important if you're shopping lenders that you're looking, yes, what's the rate, but what's the points? What's the cost for that rate? Services you can't shop for, that's going to be your appraisal, credit report, use like flood certification, right? Services you can shop for, this is going to be title. So all this is pretty much just the title work. And you'll see this is A, this is B, and that is C. So D equals A, B, and C. A, B, C. And then we come over here, check this out. I is going to equal E, F, G, and H. E, F, G, and H. So all those together, right? And then we have D plus I. So D is A, B, C, right? And then I is E, F, G, H. So that's all the total closing costs right there. Lender credit, if you're issued one, right? And then your initial escrow payment. So we usually collect a few months of the property taxes and homeowners insurance. When you're doing a refinance, we make a new escrow, but whatever's in your current escrow account, you get refunded. So it's almost a wash and they equal each other. Right here, you can, I guess, pay attention to the prepaid interest. This is based off the day you close. So let's say January, you close January 1st. You're going to pay prepaid interest from the 2nd to the 31st. So it's going to, be a little bit more. If you close on January 30th, you'll pay prepaid interest just for the 31st. Now, the way it works, you have January, February will happen, and then in March, you'll make your first payment for February. So what that means is it doesn't matter if you close early in the month or late in the month, they're going to get their money. So it's just you'll pay more prepaid interest, but you'll have more free time, if you will, in the property versus at the end of the month, you only had that one day for free, if you will, and then February. So that's prepaid interest. And then third page is just going to be all the lender's information, license. So like you'll have my license number there. You'll see 1951251. You have my email, phone number. All that will be on third page. All right, so what we covered, what is a refinance? Somebody in chat. I'm asking you all these questions, by the way. What's a refinance? What's a refinance? What's the word Conrad uses? It starts with the R. It's in and ends with a place. What's a refinance? What is refinancing? Replacing. Yep. Yep. And the benefits, what are some of the benefits of refinancing? What are some of the benefits of refinancing? Cash out. Yep. Lower payment. Yes. Yes. Lower payment, cash out. And what? Lower rate, lower payment. Yep. Oh, for the benefits, how many benefits do you want for it to make sense? Usually, how many benefits? Two. Two. All right. Where do you go to refinance? What is a professional that you go to for a refinance? Loan officer. Loan officer. Good job. Good job. Trick question, but it's not a trick question. Who would you go to if you're selling your property? Who would you go to if you're selling your property? Who would you go to if you're selling your property or you want to sell? Realtor. Yep. You go to a realtor. And if you guys need a realtor, if you're like selling too, I have a network of them. You can always reach out and I can get you connected. Um, Went through the types of refinancing, qualifying. Again, when you're doing a refinance, you're replacing your loan. So you need to meet the qualifications. So typically it works like this. You're already in the home. You did the hard part. So if you qualify once, you're more than likely going to qualify if your situation is still the same, right? So you did the hard part of getting in. So you really don't have issues with refinancing as long as you didn't like purchase a bunch of stuff. But if you're just doing a streamline, it doesn't matter about debt to income and things like that. And then we reviewed a loan estimate. So let's go through the documentation. All right, so the documentation, so you're doing it again, it's just like a traditional mortgage. Well, you know, it is. Unexpired government issued ID. We need your mortgage statement, homeowners insurance policy, just the declaration page, HOA if it's applicable to calculate, make sure that you qualify for the DTI. 2 months bank statements, all accounts. Again, this isn't that stressed because you already have the down payment, right? You're already in the home. It's just, do you have the cash to close or are we just rolling it into the loan, right? And then your income documentation, whatever your income is, usually W-2s, pay stubs, tax returns if they're required, award letters, you know, Social Security, VA, whatever income we're using. For a streamline refinance, for the streamline, just your unexpired government issued ID, mortgage statement, homeowners insurance policy, the declaration page, mortgage note. So if you don't know what that is, when you initially signed all them papers and gave your John Hancock, the mortgage note will be in there. If you don't have it, can't find it, you can reach out to title or you talk to me. I can kind of show you some ways that you can get it. And then 2 months bank statements and then recent pay stub. Your debt to income isn't calculated for the streamlines, but usually we're still going to be calling and doing verbal verification of employment. Just make sure you're still working. All right. Hey, that's what we covered. So in the chat, um, tell me, let me see, because y'all answered all the questions. Was this information helpful? In the chat, tell me yes, tell me no, tell me maybe. Was this information helpful? Was this helpful? Was this helpful? Yes. Okay. Yes. Okay. All right. All right. So here's the resources. I have your emails when you guys signed up. So I'll be sending you like the resource links here. So you have the loan estimate if you want to review it. You have mortgage rates, again, mortgage news daily. I have a few calculators that you can kind of play with as well. You have the blended rate calculator. So I'll make sure I email all that out to y'all so you'll have it. And here's my contact information. Again, Conrad Van, the mortgage man. That is my phone. You can call, text. My email, cvan next to mortgage, and then my Instagram handle, but TikTok, Facebook, just Conrad Van. You'll find me. You'll find me. And why you want to work with me? So if you're looking at purchasing or refinancing, usually you're going to go to your bank or your credit union. You're going to have branch manager, regional manager, vice president, CEO, hierarchy of management, hierarchy of fees. You come to me, I'm going to be able to shop wholesale lenders and I have a ton of different options available for you. Would love to work with you. So this is special to me because if you look at the date and you zoom in, right, this is December. So client came to me early December. They said, we have to close. We have to close by Christmas. Conrad, can you make it happen? So even as we're approaching the holiday times and stuff can get busy, typically I'm closing in about 2 to 3 weeks, but I'm always aiming to strive to beat that. So I'll set the expectation, but if we need to put fire behind it, just know that you have my back. Whereas the banks, they're going to take 30 to 45 days to close. You work with me. If we got the speed and you got the docs and everything is clean, we can close in 2 to 3 weeks comfortably, no problem. My availability, usually 7 a.m. to about 10 or so Pacific Standard Time. I'm not 9 to 5, so you can call me before or after, email me, whatever. Company license in 48 states. So if I'm not licensed there, you can call me. I can still get you connected with a co-worker. Um, that's that's pretty much it. Yeah, I think that's the last slide. So if anybody has any questions, you can like unmute. You can put it in the chat if you have any questions, any questions, any questions. Oh, sorry. Is there streamline refinance for a conventional? So there actually isn't. So that's a great question, by the way. So Streamline is just going to be for FHA and then for VA. Streamline is FHA, VA. Conventional, there is no Streamline options. You can do a rate and term, but you still have to get an appraisal every time for a conventional. There's no Streamline for conventional. That's a good question. All right. Any other questions? All right. If you have anything, reach out to me. I will be here. I appreciate you. I appreciate you guys for coming. Just to let you know, an actual appraisal for yeah, Chloe. So you have to have an actual appraisal for any conventional loan. And just to let you guys know, this was my first masterclass. I will be doing more. So there will be first-time home buyers, first-time home buyer self-employed, first-time investors. So if you guys like this, you want to see more of this, I'm going to be doing more master classes, different topics, breaking everything down, answer your questions all live because, I got you. So, all right. If you have any other questions, drop them in the chat, or if you have my contact info, just reach out to me. I will be here. And my name is my brand. I'm Conrad Van, the mortgage man. You're welcome. You're welcome. You're welcome.